Well, let's talk about the market's reaction to this morning's inflation report. We've got all three major averages under pressure right now. The Dow is down by about 1.5%, 590 points in the red. You're also seeing the S&P 500 down by nearly 1%, and the Nasdaq Composite, that's lower by about 0.4%. We'll round that off too. Markets have been rocky since economic data has begun sending some mixed signals about the health of the economy and where the Fed finds themselves right now as they are setting out to initiate their cutting cycle in September here, as that is what we're expecting and what's priced into the CME Fed Watch, as traders are now pricing in an 85% chance of a 25 basis point rate cut at next week's Fed meeting. But will that be enough to ease market jitters? Joining us now, we've got Mark Malek, who is the Chief Investment Officer over at Siebert. Great to have some time with you here this morning. So, if 25 basis points is the reality, why, for markets that have been already pricing that in to a certain extent, why are we seeing this type of reaction from your purview?
Yeah, the numbers came in as expected, and the market's reaction to this morning's number really just shows that the markets were secretly expecting or possibly even hoping for some more. And so the fact that the numbers came in pretty much on the laces and essentially eradicated any potential that the Fed is going to do one of those surprise 50 basis point cuts next week. You're seeing the reaction as we speak, not only in the stock market, but also you saw two-year note yields react initially pretty quickly. So bond traders as well were hoping for something a little bit juicier.
When it comes to what we are seeing play out within the market, you talk about the reaction there. There has been some debate about 25 versus 50. It looks like 25. It seems to be overwhelming consensus following this report. What is that? Is that 100% priced into the market at this point? And then I guess, therefore, what is the market expecting? What are you expecting from the Fed beyond September?
Yeah, if we look at this morning's numbers, and we got nothing between now and the end of the year, I think the path is 325 basis point cuts between now and the end of the year. Unless we see anything crazy coming out of the labor market, which we very much could in the upcoming months, there's not a real incentive for the Fed to rush and front load this, right? It seems like the smartest direction for the Fed, given what we know today, given the fact that we are in an election season and there may be some policy changes coming up, the path of least resistance seems to be the most conservative path at this point, which is 325 basis point cuts. And I think the conservative part of the market is sort of betting on that. Of course, there's always hope for something exciting to spur the market on the upside. But, we're focusing on our base case is 325 basis point cuts between now and the end of the year, given what we know today.
To this juncture, that exciting catalyst or that spur that you're talking about had really been this theme of generative AI. What is the next catalyst or what is the next big spur for the markets that you anticipate will have some type of major delta or impact in the price action we've seen more broadly?
Yeah, well, I hate to bring it up, but we are in election season, and it seems like even based on the numbers that we see this morning, the two candidates are neck and neck, and so there's still a big layer of unknown for the market, what to expect. And beyond the presidential election, a lot of people are not focusing enough, I believe, or we believe, on the Senate races, and those are really going to determine tax policy more so than the president. So we're going to focus on that. So I think, again, the market having a better, clear picture of what that's going to look like as we get closer to November, I think that is going to be certainly one catalyst. And of course, we have corporate earnings that will be coming out, relatively soon, and we'll be watching those things to see if there's a continuation of the last earnings season as well.
Mark, we got to leave things here on the day. Mark, thanks so much. Mark Malek, who is the Siebert CIO. Appreciate the time.
Thank you so much.